Okay, let's unpack this. Ollie's Bargain Outlet just dropped its Q2 earnings for fiscal 2025. And they've got some pretty interesting news. It's definitely raising eyebrows.
Absolutely. Today we're taking a deep dive into those key metrics. We'll see how they stack up against expectations and, what their updated fiscal 2025 outlook really tells us.
Right, because here's where it gets really interesting. Ollie's reported net sales, $679.6 million. That's a impressive 17.5% increase year over year.
Yeah, solid growth.
But even more striking, I thought, was the comparable store sales. They surged 5.0%
Yeah.
compared to what analysts expected, which was just 1.9%.
Exactly. That comp number is huge. And what's fascinating here isn't just the sales figure itself, it's also the operational strength behind it.
Like the store openings.
Precisely. They opened 29 new stores. The estimate was, 25? So they beat that, bringing their total store count up to 613.
That's pretty aggressive expansion still.
It is. And the strong execution, it translated directly to the bottom line. Adjusted net income per diluted share up 26.9% to $0.99.
Wow. Okay, so the CEO, Eric Vandervalk, he described it as operating with the wind in our sails. He attributed that success to, well, better planning, coordination,
Uh-huh.
and just strong consumer response to their bargains. Especially, he mentioned, staples and seasonal stuff.
And that makes sense. They also saw their Ollie's Army, their loyalty program members, grow by 10.6%, now up to 16.1 million members. That's significant engagement.
Definitely fuels that growth. And speaking of healthy signs, the profitability.
Right. Let's connect it to that. Importantly, their gross margin actually increased, went up 200 basis points to 39.9%.
200 basis points in this environment. How?
Well, the primary drivers seem to be lower supply chain costs, which is, frankly, a bit surprising, but great for them, and also higher merchandise margin. It really points to a healthy core business. They're managing costs and sourcing well.
So, okay, what does this strong Q2 performance actually mean for the future then? Because Ollie's isn't just looking back, right? They're raising their full-year fiscal 2025 outlook,
Yeah.
pretty much across the board.
Exactly. If we connect this to the bigger picture, their new guidance is quite bullish. They're now anticipating 85 new store openings for the year. That's up from their previous estimate of 75.
10 more stores than planned.
10 more stores. And net sales, now projected between $2.631 billion and $2.644 billion. That's a clear step up from their prior estimate.
And the other key metrics, comps and EPS.
Also revised upwards. They're now raising the comparable store sales increase forecast to 3.0% to 3.5%. And adjusted net income per diluted share is now expected to be between $3.76 and $3.84, higher all around.
So, I mean, this really paints a picture, doesn't it? A well-executed strategy focused on that value proposition. And clearly, strong customer engagement is leading to, well, real outperformance, even while the retail landscape is shifting.
It absolutely does. And it kind of raises an important question for you listening, I think. In today's economy, with all the pressures, are consumers increasingly drawn, maybe even more permanently, to that treasure hunt environment, that thrill of the bargain that places like Ollie's offer? Or is this maybe just a testament to their specific operational efficiency, their unique model just working exceptionally well right now?